Thanks for joining us. Give us your read-through of the market based on the action that we've seen in the last two trading sessions and how we've tempered off from the momentum that we were sort of gaining over the course of last week. Where do you believe markets are headed for the remainder of this week? Can we break this range of 25,100 where we seem to be stuck for some time now?
Good morning, everyone. So, yes, we do believe that, yes, market is ready to give breakout about 25, 100, 200, the supply zone, which is based on the call concentration area. Looking at the broader market, the kind of buying interest is still intact at mid-cap, small-cap space, as well as the sector rotation is happening. So I think we do believe, yes, after a brief consolidation, there is a high possibility of a breakout about 25,150, 200 zone. And once this breakout happens, I think Nifty can extend its gain towards 25,400 to 500 in continuation of this up move. All the near-term, short-term indicators are looking at the bullish trajectory only. Bank Nifty is looking very strong. The way Bank Nifty is holding above 56,500, I think Bank Nifty can also extend its gain towards 57,000 to 57,400 in the continuation of this up move, as most of the large cap private banks are contributing to this upward momentum. So we do have a bullish view for both the indices, and we expect, yes, there is a possibility of breakout of this consolidation zone of Nifty above 25,200.
All right, so that's the take coming in on the index. Let's watch out for that. But moving on to SME IPO watch, and today we are putting the spotlight on Aten Papers and Foam. What are the key concerns to the IPO, and should you subscribe to it? Sharad is here with all the details. Sharad?
In focus is SME IPO, Aten Papers and Foam, and the merchant banker is Swastika Investmart. Now, of course, the company is procuring paper from different paper mills and reselling them to the packaging industry. It's technically a middleman in the paper procurement business. Now, there are certain concerns which we have noticed in our RHP analysis, and the first one is that the company is actually operating in a cyclical industry, which is the overall paper segment. Now, the global kraft prices also that has come on a lower downtrend, almost 7 to 10% down in 2025 this year itself, and interestingly, there is a big volatility when it comes to the raw material costs. There's been a large related party transactions happening as mentioned in the RHP, and the group as well as promoter companies are actually engaged in the same line of business as well. Interestingly, a key concern is that the company has applied for a trademark for their brand, but that has been rejected as well. Largely, it's a low margin business, but overall, this is coming in the paper industry, which is cyclical in nature.
Thanks for taking us through that SME IPO of the day and your outlook on that. But on that note, in fact, Kunal, help us understand some big moves that we've seen yesterday in terms of news flow, or rather this morning. We have Vodafone Idea that's going to be in focus on the back of their 5G rollout in Bangalore. From what I understand yesterday, Vodafone Idea was one of the biggest volume buzzers that we've seen in trade. Where do you think the stock is headed on the charts? Because we've seen some recent consolidation, but after that, the stock has stayed pretty steady.
It's still pretty steady, and largely I think the stock has been trading in the band of 7 rupees to 10 rupees, or maybe 6.8 to 10. That's a much more broader range for Vodafone Idea over the last, I think 5-6 months. It doesn't come as a surprise that the stock at current levels also, I think in the recent past, just about last week or so, the stock managed to bounce back yet again from that 6.75, 6.8 levels, and then come back above closer to that 7 mark. So I believe that the stock is still largely trading into a range. I would not suggest any major trades on Vodafone Idea at current levels because of the way the stock price trends have been over the last few weeks. But it just looks like that maybe closer to that 6.5 or mark, 6.75 levels for Vodafone Idea. The risk reward would start to look a little bit more attractive than what it is when the stock generally trades closer to 9.5 to 10 rupees.
All right, so that's the take coming in on Vodafone Idea. Let's watch out for that. But let's also have a look at Dr. Reddy's, because of for the past 3 to 4 trading sessions, the stock has been inching higher, and just yesterday it was one of the top gainers in the Nifty 50 side, over 2% of the gain coming in for this counter as well. But Rajesh, help us with the chart check on Dr. Reddy's. Do you believe that this up move can take the stock higher to 1400 levels as well, or do you believe it should halt at this point in time, because of late no significant news flow is what we track?
So we witness most of the pharma stocks now showing some bit of buying interest since last couple of trading session. Dr. Reddy is one of the stock. If we look at the weekly structure, this is the fifth consecutive week where stock is showing some bit of buying interest, and the way weekly charts are now shaped up, yes, we do believe that this up move can extend further, and 1400 to 1420 would be the next target for the stock. Looking at the near-term, short-term structure, there is a sustained buying action is taking place in this counter. On the daily chart also, stock is comfortably holding above to all its near-term moving averages. So yes, one can look this stock on the buying side with stop loss of 1320. On the higher side, 1390 to 1420 would be the next target in the continuation of this up move.
The technical take on Dr. Reddy's. But Deepa, while we have you with us and while we are talking about the entire pharma space, I also want to get your view on healthcare in terms of hospitals, because we have been talking about financials, IT, pharma, but hospitals is a space that we haven't touched upon in a really long time. Today we have news from Narayana Hrudayalaya that their subsidiary has infused $1 million into their Cayman subsidiary for expansion on that front. If you have to put your bets in the hospital space, would you prefer a Narayana, let's say, over a Fortis, Max, Apollo? What would the pecking order there be?
No, I think we would go with Apollo. Having said that, it's a company which we and our clients are invested in. And after many years of, I would say, stagnant capacity, the next 2-3 years should see a 50% increase in bed capacity. And that could depress earnings for a year or so, but for the longer term growth of the earnings, it is very positive. Also, we should see their pharma distribution business, especially the online pharma distribution business, that should start to break even. That will give a great alpha when it comes to their bottom line. And last but not the least, I think they are the most comprehensive healthcare player, and perhaps their high valuations are justified. So maybe at corrections, if you get an opportunity to buy into Apollo Hospitals, that could be a good, I would say, investment as compared to any of the other hospital companies. It trades at a premium multiple, but is well justified. But nonetheless, I think this is one sector investors should have a decent allocation to, because it's a stable sector, it's a defensive sector, and medical expenditure, family-wise, is growing within India gradually. And a lot of these companies, be it Narayan Health or some of the other ones also, they have positioned themselves quite well in terms of expanding capacity, keeping their asset levels low, or rather following an asset-light model. And last but not the least, I think they are not expanding as aggressively as before. They are waiting for the hospitals to get profitable, the new ones, before embarking on new expansion. So it's a good industry to be invested in, but the only issue is that valuations are on the higher side. So one needs to just be a bit careful about that.
Coming in on hospitals, but Kunal, I wanted to have your take on AB Capital, because we know that you track this stock very closely, and now the block deal of almost 1% is through. Give us some sense that where do you stock headed given this block deal that is now done, and the stock is now inching higher to its October high levels, October 2024 high levels.
Yeah, I think now this should probably let the stock come out of that zone of a major resistance and potentially even a multi-year high about that 247 mark for AB Capital. I think it's been a fantastic quarter for the stock price, from almost 150-60 rupees, which was the low for AB Capital in the last 3 odd months, towards a point when the stock is at almost on the verge of breaking past about the lifetime high marks, about 246, 247 levels. I believe that the comeback has been very strong. It's been led by extremely strong volumes. The setup prior to that also in the last 1 or 2 years has been more of a gradual, consistent price uptrend. We looked at the quarterly charts on a line basis for AB Capital, and even on quarterly basis over the last 10 to 12 quarters, in fact more than that, the stock has been consistently making a pattern of higher highs and higher lows. So it has gone through those phases of corrections, but then whenever the stock has managed to make a comeback, it's not just made a new high for itself, it's actually managed to surpass above the previous major highs by a huge margin. So I think in all of those contexts, it still looks extremely attractive. I would be bullish on the stock from a near-term play, and from an immediate perspective, I would look at a new high being reached for AB Capital.
Kunal's bullishness on AB Capital continues this morning. But Deepan, thanks so much for joining us. We'll let you go. But Kunal and Rajesh, what about your mid-cap bets? Rajesh, we'll go with you first. In the mid-cap end of the market, what's looking attractive today?
The first stock is from the pharma space, that is Glenmark, is looking very attractive. The way stock managed to view breakout of falling channel on a weekly chart, and there is a sustained buying action taking place in this counter. We do believe that Glenmark can extend its gain. We are projecting target towards 1650 to 1660. So one can buy Glenmark Pharma with stop loss of 1597. Another stock is from the automobile space, that is Tata Motor. The way stock is now, managing to cross its 20-day moving average after a brief consolidation. So we believe that, Tata Motor is looking promising on the near-term chart, and a possible upside towards 755 we could see in this counter. So one can buy and accumulate Tata Motor with stop loss of 720.
Those are the two buy calls coming in from Rajesh. Believe Tata Motors is the consensus buy from both of our experts.
I think over a long-term structure for United Sprit is on the bullish side. Yes, based on this news flow, I think, yes, there could be some volatility in the stock. But looking at the structure, I think, yes, 1500 to 1490 would be the range where, stock will again, try to find some support buying action. And I think if it's hold 1490, 1500 in this, volatility, so I think, again, stock will resume its uptrend. On the higher side, 1560 is the immediate resistance. Once the stock again crosses above 1560, I think again stock will resume its uptrend, and then possible target towards 1600 would be there. So overall structure for United Sprit still bullish. So buy on dips would be the strategy, and for Reddy also the setup is also on the bullish side. On the downside, 2600 is the major support area for the stock. So I think in this volatility, I think if it's managed to hold about 2600, I think trend is likely to exhibit on the bullish side. So here also one can buy around 2600, which is a immediate important support area for near-term perspective.
That's the take coming in on some of those Alco-Bev names. IREDA, they've raised about 2,000 crore rupees via their share sales. So look out for what that stock as well may be doing. LIC has got 50% of the allotment. That's what reports seem to be indicating. And let's see what happens on both, Zomato as well as Swiggy, and where is it that they settle down. There has been a lot of chatter in the market for the last 2 days as to if indeed Bangalore test of Rapido goes all country, and if it turns out to be a success purely because of the price point, what kind of pressure it's going to weigh in on both Swiggy as well as Zomato. You did see a little bit of a knee-jerk reaction day before, at least on Eternal, but I don't know how sustainable that downtick could be because it's still early days yet really for Rapido. That's Swiggy in trade for you, just mildly soft as we speak right now, and it's pretty mild for the Nifty as well. Kunal, that global cheer clearly is not really rubbing off on us. We're just dragging our feet in a very, very quiet zone. What's the take?
Yeah, I think we are taking a lot of time to try and consolidate. But, Aisha, with many global indices one by one hitting new highs, whether it was Europe yesterday, today it's Australia, and then you have other S&P, and Nasdaq is also showing signs of strength. So when you have so many global indices which are actually showing signs of strength, it's a matter of time that our markets will also come back to lifetime high levels. See, the Bank Nifty is already at a new high for itself. The Nifty IT index has seen recovery. You're seeing strength coming back into the metal counters. So there are underperformers which are making a comeback, and there are strong stocks in sectors which are actually getting more stronger. That's actually a good recipe for markets to come back to lifetime high levels. I would believe that potentially it's a matter of maybe 3-4 weeks for the Nifty to try and come back to the lifetime highs.
And then by then, the big uncertainty with regards to tariffs as well should be out of the way, and we should be perhaps headed that way. On that happy note, let's check in on how quiet it's going to be today and whether some more consolidation is in store for us. It seems to be the case, given how we've just about been in a very, very narrow, very tight band for the past 3 trading sessions post policy. 25,086 is where the Nifty is, and once again it's as flat can be. AB Capital, that block deal has happened of 800 crore rupees. Look out for what that stock does. United Spirits, of course, is going to be top on our radar, given that the Maharashtra government has hiked excise duty on Indian-made foreign liquor by 50%. It's the steepest of the hikes, and there you go, it's a 5% slash that you're seeing on United Spirits. 1536 thereabouts is where that stock is. And then, of course, there's Vodafone Idea, which has now launched the 5G services in Bangalore. So that's one stock which is in focus. Tata.com, after their investor day, reiterated long-term digital ambitions and the FY28 guidance. Also, they hope to clock in 28,000 crore rupees in data revenues. So that's Tata.com in sight for you right now. What about NTPC? That's the other stock which is also in focus. The government is looking to give an additional viability gap funding of about almost 5,400 crore rupees for this one to set up that 30 gigawatt plant that they look at. There's Wipro, wherein the food wholesaler Metro AG has extended their partnership with the company for additional 2 years. There's also credit access. They've got that $100 million multi-currency syndicated social loan as well. Keynes, of course, is the other one which is in focus. So a bunch of these stocks which we are looking out for. But I think what's been making up the market right now has really been technology. And then I want to check in on what Maruti is up to. Given that within the 9 minutes of trade yesterday, it was only just reports indicating that perhaps Maruti may have cut its guidance. But yeah, it's official now. 0.5% is the downtick that you're seeing on Maruti after yesterday's fall. What about technology? That seems to be having a winning edge and trying to play catch up with the rest of the market. Right now, though, Nifty IT has started off on a lot more tempered mood. In fact, if nothing, it's Nifty Auto and Realty which is actually taking the charge, while banks are also pretty much mirroring what the Nifty is doing, or vice versa. Kunal, once again, a quiet day it seems. What are you penciling in?
Yeah, a quiet day, but I think there are a few sectors and stocks which are actually seeing a good follow-through up move. We're discussing AB Capital also. That's a stock which has been looking attractive. In terms of opening trade, I would actually look at Infosys, from the large cap IT name, a stock which I think has just recently managed to cross about the 1600 mark after quite a bit of consolidation. I think that stock starts to look attractive.
Okay, so that's Kunal's first trade. But Rajesh, what about you? What's looking good at market open?
I think automobile is showing some bit of sign on the buying side, and looking at the structure for TVS Motor, I think this stock is ready to give breakout of the consolidation which we have witnessed since last couple of days. So I think TVS Motor can be looked at on the buying side, possible target towards 2840, 2860 we can see. So TVS Motor is buy with stop loss of 2750. Another space where we are focusing, that is, metal. And I think in metal, JSW still is looking promising. The way now stock is trading above 1000 level, I think if it continues to trade above 1000, possible target towards 1040, 1050 we can see. So this stock is also looking attractive with stop loss of 990.
So those are the first trades coming in from both of our experts. Autos is looking good to Rajesh, and yes, M&M is definitely leading the charts. It's the top gainer in the Nifty 50 side. But Kunal, what about big boy Reliance? Because I see that the stock is making into the list of the top gainers on the Nifty 50, almost a 1% jump coming in. Do you believe that this can actually give a push to the markets as well, and the stock is expected to head higher from these levels?
Yeah, there is a possibility because it's been, I think, 1.5 months now for Reliance in a range. 1450 thereabouts, plus minus 20 points for Reliance Industries has been the range over the last 1.5 odd month from I think the start of the month of May. So and the stock moves in this typical tendency of 1 to 2 months of a price uptrend, a 20% uptick into the stock price, and then post that at least 1 to 2 months of a sideways consolidation. Post that we expect the stock to break out on the upside. So my expectation is that it's a matter of time. Traders who have a risk appetite as well as a time frame of 3 to 4 weeks, I think they should be bullish on Reliance Industries.
Okay, so that's the take on Reliance. But Rajesh, I want to talk to you about a railway stock that's in focus in today's trade. That's Texmaco on the back of a 44 crore rupee order win that they've bagged. And it's not only this one, right? We've been hearing a lot of news flow coming in from the likes of Railtel, RITES over the course of last week. And railway stocks have seen quite the run up over the last 1 month or so. What's your take on these stocks, and do you believe that this run up is a little bit more sustainable on the charts going ahead, or now is it the end of the rally for this pack?
No, still, railway stocks are holding above their, near-term breakout levels. The way most of the railway stocks are, now showing sign of consolidation, we still holding our bullish view on the railway stocks, and we believe that, after a brief consolidation, there could be another leg of rally we can see in the near-term perspective also. From that space, RVNL is looking promising. The way stock is consolidating since last couple of days and holding about 20-day moving average. I think there is a possibility that RVNL can give breakout above 445, and once this breakout happens, I think rally can extend towards 470, 480 kind of zone on the higher side. Again, after a sharp rally, now Titagarh is also witnessing some bit of consolidation, but still near-term structure is bullish and the stock is consolidating at higher band of this rally. So I think if these stocks manages to hold above 925 level, I think here also we can see a good amount of rally to unfold, and a possible target towards 1000 we may see on the positional perspective. So this stock also one can keep on their buying list with stop loss of 925.
Okay, Rajesh, great to have you on the show. Thanks as always for joining in. Let's move on now and let's welcome on board Lawrence Balanco, technical analyst at CLSA. He's joining us from Sydney right now to talk about what he's making of the world markets. Lawrence, hi, morning. Great to have you on the show. And